So, let's get right into it. Today, we're taking a look at the really fascinating case of RZLV. This is a company that, by all business accounts, seems to be absolutely crushing it. But its stock chart, well, that's telling a totally different story. It's this classic clash that has a lot of people scratching their heads.
And that's really the heart of the mystery here, isn't it? You've got a company putting out press releases about huge, game-changing deals, yet the stock price is just kind of shrugging its shoulders. So the big question on everyone's mind is, what gives? What is actually going on? And this slide just lays it out perfectly. On one side, you have the fundamental business news, and it's just, well, it's screaming. Big wins, big renewals, you name it. But then you look at the stock chart, and it's barely making a peep, just sitting there. It's this complete disconnect that makes this situation so interesting to dig into.
Okay, so first things first, let's talk about the screaming part of the equation, the fundamental business wins that suggest this company is absolutely on fire. I mean, look at these names. We're talking about Gap and Banana Republic using their tech right now in Mexico. We're talking about Snapdeal, a massive e-commerce player in India, signing a big multi-year contract. And then a totally different industry, travel, with a global powerhouse like Qatar Airways. The key here is that these are live deployments. This isn't just a test run. This is the real deal.
Getting new customers is one thing, but keeping them happy, that's the true sign of a great product. And this is where the story gets even more compelling. Take Vaga Closet. An incredible 60% of their shoppers are using the image search feature. That's not a novelty. That's a core part of their business now. And maybe even bigger, Agio, which is part of this huge conglomerate, just re-upped for another multi-year deal. That tells you the technology works and it's making them money.
So where does all this lead? Well, it points directly to this big number. The analysis suggests that because of all these wins we just talked about, the company is on a very clear path to hit over $200 million in annual recurring revenue by the end of 2025. This isn't just some hopeful projection. It's presented as the direct result of their current momentum.
Okay, so the business case seems rock solid. But now we have to flip the coin and talk about the other side of this puzzle, the stock that's just been stuck on ice. Why isn't any of this good news showing up in the price?
And this quote from the source analysis it absolutely nails it. It's such a simple way to capture the strange situation we're seeing. The business is loud and clear, but the market is just quiet.
So the way the analysis describes what the stock is doing is with this perfect analogy. It's like a coiled spring. The price is just getting wound tighter and tighter in this narrow little channel, building up all this potential energy. It's basically waiting for a catalyst, some big event or a surge in trading volume to finally let it all go.
So let's get into the nitty-gritty of that coiled spring. It's time to step inside what the analysis calls the technical battle zone and see exactly where the fight is happening.
This is it. The whole war is being fought in a tiny 20-cent window. You get the ceiling at $2.96. That's the level the bulls have to smash through. Then you have the floor at $2.76. That's the line the bears need to break. And sitting just above all of it is that really important upside target, the 200-day moving average at 312.
So what's the big deal with this 200 SMA? The analysis uses a brilliant analogy. Think of it as the stock's long-term report card. Right now, because RZLV is trading below it, its long-term grade is basically a C or a D. Getting back above that line would be like getting an A+. It's a huge signal to the market that the entire long-term trend could be changing for the better.
Now, what's really cool here is that the analysis doesn't just describe the problem, it lays out a specific playbook. So let's start with the bulls' plan of attack, what they're calling the Green Day strategy.
So the plan is super specific. The trigger is a clean break above that 296 ceiling, but, and this is the important part, it has to happen on high trading volume. Without a surge of buyers, it's probably a fake out. If that happens, the first goal is to retake that report card level at 312. If the momentum is really strong, the next target is up around 354.
But of course, we have to look at the other side. This is a battle after all. So what happens if the good news continues to be ignored and support fails? Let's walk through the red day strategy.
For the bearish case, it all hinges on that one number, $2.76. If the stock price closes below that floor, the entire bullish setup pretty much falls apart. The first potential safety net is down at 256. If that doesn't hold, the next major level of support is way down at 220. And the absolute line in the sand, what you might call the point of no return, is that recent low of 219.
And this leads to some very blunt but very smart advice from the analysis. If that 276 level breaks, simply do not catch a falling knife. In other words, don't try to be a hero. Let the price find a new solid bottom before even thinking about it.
And this all brings us to the final, really big picture question. Is RZLV just a classic coiled spring, getting ready to rocket higher once the market finally wakes up to its fantastic business news? Or could it be something else? If it fails to move higher despite all this good news, could it be a canary in the coal mine, a warning sign about how the market is really feeling about AI stocks in general? That's a question worth watching very, very closely.